Welcome to Steve Savant's Money, the name of the game. Hi everyone, I'm your host, Steve Savant, syndicated financial columnist and money gamer extraordinaire. Today we're talking about why disability insurance may be the most important coverage of all, with nationally recognized disability insurance expert, Tim Casey. Welcome to the show, Tim.
Thank you, Steve.
Tim, I'm talking about America's total, I would say, love affair with disability. I mean, Social Security disability is through the roof. And there's a lot of investigation going on just to see, hey, are people gaming the system?
Yes.
But there are also authentic disability occurrences happening in America. And most Americans go, well, I bought my term life insurance.
Yep.
I have homeowners. I have property casualty on my car. But they forget about their earning potential, their paycheck protection. Yeah. Talk about why it's so important. I mean, what's more important than our paycheck?
I couldn't have said it better myself. You know, when you get into a situation for the average working person, their paycheck is their most valuable asset. You know, there are laws that make sure that their clients or that people insure their home in case of something happens, their automobile, and those are all valuable assets. But what's more important than your ability to get up and go to work every day, get a paycheck, maintain your family's style of living, and if something happens to you, even from a short-term basis, okay, let's say you get sick or hurt, even for a small amount of time, where is the income going to come from? And that's what disability insurance is. Disability insurance is paycheck protection insurance.
Think about it. More people lose their homes over a disability on one of the bread earners than any other event. Now, I'm really curious because people are always going to say, I get that, Tim, and paycheck protection, I'm there with you, but is it expensive?
We can protect your income to a level that's very affordable for the average client. I mean, typically we want to design a program that makes sure at least that you have something at time of disability, okay? So yeah, we can make the product, you know, a higher end type of product, but the majority of the time we want to make sure that if something happens to that client, that the bottom line is that they're going to have income protection. You mentioned Social Security, okay? Social Security from the definition, and that's what the key is with disability insurance, okay? Who decides if you're disabled or not? The definition of disability for Social Security is so rigid, that's why so many people have a hard time qualifying for that definition of disability and have a hard time collecting with that. The types of products that we sell have a much more lenient type of definition, and we can make them affordable so if the client gets sick or hurt, they're going to get paycheck protection.
I've noticed a stat here that says the average disability period a person has an event is about 30 months. I'm thinking people who don't have any coverage, 30 months could be a deal killer. Lose your home. You'd stop making payments on your car. All the big asset items that I have. That could be a real problem if the average disability, and by the way, this isn't people in their 50s having this. This is the average, and there's people in their 20s and 30s in these statistics that are down for 30 months. That's a long time.
It's a tremendously long time. I mean, when you talk about, you know, what people like to have set aside as a rainy day fund, in today's environment, if you have 90 days set aside, that's probably on the long end of things for most people. In that situation, now you're talking about 3 months. The statistic that you just said was 30 months. What happens for the next 27 months while you're still out recovering in terms of and not having any income? And the other side of that, though, is with a disability in a situation like that, not only is it financially stressful, all right, but also if you're worried about where the money's going to come from, that may impact your recovery time. We see how many medical things that go on to talk about how stress relates to how quickly people recover from disability. If you take the stress of the financial side of things out of that equation, it helps you recover quicker.
Well, I'm thinking if I'm disabled, I'm not even making my health payments. And if I get set back on COBRA, if I have to pay COBRA payments when you leave your employer, you have to now pick up that tab. Many people are shocked at the number that the actual premium is, and it could be $1,000 a month.
At least in some situations. So now not only do you not have a paycheck coming in the door, but also now you've got added expense. Most people don't realize that their expenses go up when they become disabled. You've got additional co-pays that you're paying for if you still stay on the health insurance. You've got more out-of-pocket expenses, and eventually your health insurance might be canceled, so now you're going on COBRA, so there's another expense associated with that.
When we come back from the break, we're going to continue our discussion about getting disability insurance. It's probably the most forsaken insurance coverage, and yet it's so important because it covers our paychecks. We'll be right back.
Take a close look at your hard-earned dollar. How do you think your money's doing? Are you keeping an eye on it? Is it protected from taxes, inflation, and market risk? Over time, those Washingtons could become Franklins. With tax-advantaged indexed universal life, from one of the largest distributors of indexed universal life, Ash Brokerage.
Welcome back to our second segment with disability expert Tim Kukeza. Tim, when we're talking about these benefits, disability benefits, we're trying to protect our paycheck. I can't think of anything that would be higher in the food chain of insurance than this. Maybe my home. But how can I pay my home if I don't have a paycheck?
That's right.
Now, I want to talk about another area when we're talking about this is I'm trying to pay for my expenses and my lifestyle, but over here I'm also trying to contribute to my 401k. Yeah. If I now am disabled, not only do I have to worry about paying my expenses in my home, I have to worry about, hey, now with my retirement, I still have to retire.
That's right.
Talk a little bit about retirement coverage when we talk about disability.
Yeah, I mean, in a situation like that, if you're an employee, okay, and you become disabled, your employer's putting into Social Security, you're putting into Social Security, but at time of disability, all right, even if you have an employer-sponsored program that might help you a little bit, you can still buy an individual disability policy on top of that. Plus, now there's no funding going into any retirement system for you at all. So some of the disability carriers at time of disability not only provide you a monthly DI benefit to help you with that paycheck protection scenario, but also will contribute to a separate account that funds your retirement, so that when you are ready to retire, you haven't lost, in your example, 30 months of contributing to your retirement benefits.
Now, I'm thinking when those benefits come to me, those benefits are tax-free.
That's right.
I don't think a lot of people think, well, what do you mean I'm going to get benefits? Tax-free benefits. So what's the typical amount that I can get? Let's say I make $50,000 a year. And what will it cover? Does it cover 20% of my $50,000, 50%? How high up can I go to protect it and get the benefit free?
Now, when you say the benefit free, still when you're taking that money out, it's still going to be taxable money. But it's going in, that there's no taxes paid to you. Some carriers will match whatever you were putting into the contributions themselves, okay? And some carriers will even allow you to put in more, up to the threshold typically is about $1,500 a month.
Well, let me stop you there. So if I'm putting in contributions every month of $500.
Yep.
I might actually get bigger contributions by my disability insurance carrier that would give me $1,000.
Yeah, we can show you a premium and a policy that says, okay, here's what I was putting in, this is what the cost is going to be for the $500, okay? But then also we can show you with some of the carriers, all right, let's put in $1,000. Well, I'm not putting in $1,000. Doesn't matter. This carrier will put in $1,000 for you. Here's what the premium is. So at time of when you're ready to retire, they've been putting in that $1,000 for the 30 months that you were disabled.
I want to shift gears a little bit and talk about America has so changed, our society has changed. Almost all our lifestyles in married couples are all predicated on two earning incomes.
Yeah.
Everybody keeps thinking old school, well, I'm covering the male equation. And sometimes our actual female side of that equation is making more money than the male is, and we're not covering her because we're so not used to putting disability on both mom and dad.
Right.
Talk a little bit about females and disability.
Yeah, when you look at it, basically, it doesn't matter the gender. You're going to be able to have paycheck protection. But when you look at the disability world, you see more and more females and households that are relying on both incomes, and as you said, some of those females have the higher income.
Right.
So in that situation, everything that's disability is based upon what your occupation is, and your gender does come into play there. But across the board, that I don't care who the income earner is, male or female, you need paycheck protection, and we're able to provide you that paycheck protection.
So just consider, if you're sitting there with a mortgage that's predicated on both you and your spouse, you have to have a job to pay for that mortgage, that lifestyle. This is so important. It's not just one person, but it needs to be covered for both people. It's so important. Well, that's our show for today. I want to thank Tim Kukeza for being my special guest and today's Money Mentor. And before moving forward with any ideas you hear on our show, always consult your tax advisor and your legal counsel. And remember, as the good Reverend John Wesley once said, make all you can, save all you can, give all you can. I'm Steve Savant. See you next week.